Welcome to our channel. Today, we're diving deep into the world of dividend ETFs with a head-to-head comparison of two popular funds, the Schwab US Dividend Equity ETF, SCHD, and the ProShares S&P 500 Dividend Aristocrats ETF, NOBL. If you're looking to maximize your dividend income and understand the nuances of these investment options, you're in the right place. In this video, we'll explore how SCHD and NOBL differ in their dividend selection criteria, sector allocations, volatility, and historical performance during various market conditions. Plus, we'll break down the quality and sustainability of the dividends they offer, so you can make an informed decision about which ETF aligns best with your investment goals. Whether you're a seasoned investor or new to the world of dividend stocks, this comparison will provide valuable insights into which ETF might be the best fit for your portfolio. Let's get started. What are the primary differences in the dividend selection criteria between SCHD and NOBL? The Schwab US Dividend Equity ETF, SCHD, and the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, both focus on dividend-paying stocks, but they use different criteria for selecting their holdings, which leads to some key differences between them. SCHD's primary focus is on high dividend yield and quality. The ETF is designed to track the performance of the Dow Jones US Dividend 100 Index, which includes 100 high dividend-yielding U.S. stocks. The selection criteria for SCHD emphasize a combination of high dividend yields and strong fundamental metrics. Specifically, the index includes companies that have a consistent history of paying dividends and meet certain financial quality criteria. This includes factors such as cash flow to pay dividends, return on equity, and debt-to-equity ratios. In summary, SCHD focuses on a broader set of high-yield dividend stocks with stringent quality requirements. On the other hand, NOBL tracks the S&P 500 Dividend Aristocrats Index, which includes S&P 500 companies that have increased their dividends for at least 25 consecutive years. This index is more selective in terms of dividend history. The Dividend Aristocrats are known for their long-term commitment to growing dividends, and the ETF specifically targets companies with a proven track record of reliable dividend increases over a significant period. The selection criteria for NOBL are based primarily on the longevity and consistency of dividend growth, rather than current dividend yield or other financial metrics. In essence, SCHD's selection criteria focus on high current dividend yield and overall financial quality, while NOBL's criteria are centered around a long history of consistent dividend growth. This results in SCHD potentially including a wider range of companies with varying dividend histories and yields, whereas NOBL is more concentrated on companies with a robust and long-standing record of increasing dividends. What is the historical dividend yield of SCHD compared to NOBL, and how have these yields changed over time? The historical dividend yields of the Schwab US Dividend Equity ETF, SCHD, and the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, reflect their different investment strategies and selection criteria. SCHD generally has had a higher historical dividend yield compared to NOBL. This is largely because SCHD focuses on high dividend yield stocks and includes a broader array of companies that offer strong current yields, as well as meeting specific financial quality metrics. As a result, SCHD tends to deliver a higher yield in the short term. Historically, SCHD's yield has been in the range of around 3 to 4%, though this can fluctuate based on market conditions and changes in dividend payments by the constituent stocks. NOBL, by contrast, emphasizes companies with a long history of dividend increases rather than high current yields. The S&P 500 Dividend Aristocrats, which NOBL tracks, include companies with at least 25 consecutive years of increasing dividends. These companies are often more mature and may not offer the same high yields as some other dividend payers. Consequently, NOBL's historical yield has typically been lower than SCHD's, usually ranging between 2 to 3%. This lower yield is reflective of the premium placed on long-term dividend growth stability rather than the current dividend level. Over time, the yields of both ETFs have been influenced by changes in interest rates, market conditions, and the financial performance of their constituent companies. SCHD's yield can fluctuate more with changes in its underlying stock's dividend payments and market conditions affecting high-yield stocks. For NOBL, yield changes are often more gradual, influenced by the pace at which companies in the index continue to increase their dividends and the overall growth of the underlying stock prices. Overall, SCHD tends to offer a higher yield due to its focus on high dividend payers, while NOBL's yield reflects its emphasis on companies with a long history of increasing dividends, resulting in a typically lower yield but with a strong track record of dividend growth. How do SCHD and NOBL differ in terms of their sector allocations, and what impact might this have on their performance? The Schwab U.S. Dividend Equity ETF, SCHD, and the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, differ significantly in their sector allocations due to their distinct selection criteria and investment philosophies. These differences in sector allocations can influence their performance in various ways. SCHD focuses on high dividend yield stocks and includes a broader set of companies based on their yield and quality metrics. As a result, SCHD's sector allocation tends to be more diverse and reflects a wider range of industries. Historically, SCHD has a notable allocation to sectors such as information technology, financials, and consumer discretionary. The emphasis on high dividend yield can lead to significant exposure to sectors like utilities and telecommunications, which are known for stable dividend payments but might not have the same growth potential as other sectors. NOBL, on the other hand, tracks the S&P 500 Dividend Aristocrats Index, which consists of companies that have consistently increased their dividends for at least 25 years. This focus on long-term dividend growth often leads to heavier allocations in certain sectors, where companies have demonstrated stability and reliability in dividend payments. As a result, NOBL tends to have a larger allocation to consumer staples, healthcare, and industrials. These sectors are known for their steady performance and resilience during economic downturns, but they might not have the same level of growth as technology or more cyclical sectors. The sector differences between SCHD and NOBL can impact their performance in several ways. SCHD's exposure to sectors with high dividend yields might lead to relatively higher yields, but could also result in slower capital appreciation if those sectors underperform compared to more growth-oriented sectors. For instance, a large allocation to utilities and telecommunications might provide stability and consistent income, but could lag behind sectors like technology during strong market upswings. Conversely, NOBL's emphasis on dividend aristocrats, which are often in more stable, mature sectors, may offer lower but more reliable dividend income. The companies in NOBL's index are generally perceived as safer investments due to their long-term commitment to increasing dividends, which can provide a cushion during market downturns. However, this conservative approach might result in more muted performance during periods of strong economic growth when high-growth sectors outperform. In summary, SCHD sector allocation reflects its focus on high current dividend yields, leading to notable exposure to sectors with traditionally high dividends. NOBL's sector allocation, influenced by its criteria for long-term dividend growth, often results in a concentration in more stable, defensive sectors. These differences can affect their performance, with SCHD potentially offering higher yields and broader sector exposure, while NOBL may provide stability and consistent dividend growth but with potentially lower yields and less exposure to high-growth sectors. What are the historical volatility and beta of SCHD compared to NOBL, and how does this reflect on their risk profiles? The historical volatility and beta of the Schwab U.S. Dividend Equity ETF, SCHD, and the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, provide insights into their risk profiles and how they might respond to market fluctuations. Volatility measures the degree of variation in the price of an asset over time. It is often used as an indicator of risk. Higher volatility means greater price swings and, consequently, higher risk. Historically, SCHD has exhibited moderate volatility. This can be attributed to its broad exposure to high dividend-paying stocks across various sectors. While SCHD includes stable dividend payers, its diversified sector allocation means it can still experience notable price fluctuations, especially given that high dividend stocks are sensitive to changes in interest rates and economic conditions. NOBL, which focuses on the S&P 500 Dividend Aristocrats, tends to have lower volatility compared to SCHD. This lower volatility arises from its investment in companies with a long history of increasing dividends, which generally indicates stability and resilience. These companies are often in defensive sectors such as consumer staples and healthcare, which can provide stability during economic downturns. Therefore, NOBL's focus on dividend aristocrats contributes to its relatively lower price swings. Beta is a measure of an asset's sensitivity to overall market movements. A beta greater than 1 indicates that the asset tends to be more volatile than the market, while a beta less than 1 indicates less volatility relative to the market. Historically, SCHD has a beta close to or slightly above 1, indicating that it tends to move in line with or slightly more than the market. This reflects its exposure to a broad set of dividend-paying stocks that may react to market conditions in a manner similar to the broader market. NOBL, in contrast, typically has a beta lower than 1, often in the range of 0.7 to 0.9. This lower beta suggests that NOBL's returns are less sensitive to market movements compared to the broader market. The lower beta can be attributed to its focus on dividend aristocrats, which are generally stable companies with a consistent track record of dividend increases. These companies tend to be less volatile and more resilient during market downturns, leading to reduced sensitivity to overall market swings. In summary, SCHD generally exhibits higher volatility and a beta closer to or slightly above 1, indicating greater sensitivity to market movements and potentially higher risk. NOBL, with its focus on stable, long-term dividend payers, tends to have lower volatility and a beta below 1, reflecting a more stable risk profile and lower sensitivity to market fluctuations. This makes NOBL potentially less risky in terms of price volatility and market sensitivity, but it may also offer lower potential for rapid gains compared to SCHD. How have SCHD and NOBL performed during different market conditions, for example, bull markets versus bear markets? The performance of the Schwab U.S. Dividend Equity ETF, SCHD, and the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, vary significantly depending on market conditions, such as bull markets, periods of rising stock prices, and bear markets, periods of declining stock prices. In bull markets. During bull markets, where stock prices are generally rising, SCHD has historically performed well, but not necessarily as strongly as some growth-focused ETFs. SCHD includes a broad range of high dividend-paying stocks, which often include sectors such as technology, financials, and consumer discretionary. In a bull market, sectors like technology and consumer discretionary often lead in performance due to their growth potential. While SCHD provides solid returns thanks to its high dividend yield, it may lag behind in performance compared to more growth-oriented investments or ETFs that focus solely on high-growth stocks. Nevertheless, the strong fundamentals of SCHD's holdings and their consistent dividend payments contribute to its positive performance. NOBL, with its focus on dividend aristocrats, companies that have increased their dividends for at least 25 consecutive years, often experiences more moderate gains during bull markets. The companies in NOBL's portfolio are typically more stable and less growth-oriented. While these companies are resilient and provide reliable dividend income, they may not participate as fully in the rapid price appreciation seen in high-growth stocks. Therefore, during bull markets, NOBL's performance might be more subdued compared to SCHD and other growth-focused strategies, but it still benefits from the overall upward trend in the market. In bear markets, where stock prices are generally falling, NOBL tends to perform better relative to SCHD. The dividend aristocrats in NOBL's portfolio are companies known for their stability and consistent dividend payments, which can act as a buffer against market downturns. These companies are often in defensive sectors, such as consumer staples and healthcare, which are less sensitive to economic cycles and tend to be more resilient during periods of economic stress. Consequently, NOBL often experiences less severe declines compared to the broader market during bear markets. SCHD, while also composed of dividend-paying stocks, may not offer the same level of protection as NOBL during bear markets. SCHD includes a mix of high dividend yield stocks from various sectors, including those more sensitive to economic cycles, such as financials and industrials. As a result, SCHD may experience more pronounced declines compared to NOBL during market downturns. A high dividend yield can provide some level of cushion, but it might not fully mitigate the impact of a broad market decline. In summary, SCHD generally performs well in bull markets due to its broad exposure to high dividend-paying stocks, but may lag behind high-growth investments. During bear markets, NOBL tends to outperform SCHD due to its focus on stable, dividend-increasing companies that offer a buffer against market declines. NOBL's defensive nature helps it maintain better performance during downturns, while SCHD's performance is more susceptible to broader market fluctuations. What are the key differences in the quality and sustainability of dividends paid by the constituents of SCHD versus NOBL? The key differences in the quality and sustainability of dividends paid by the constituents of the Schwab U.S. Dividend Equity ETF, SCHD, versus the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, stem from their distinct selection criteria and focus areas. SCHD's dividend quality and sustainability *. SCHD tracks the Dow Jones U.S. Dividend 100 Index, which selects its constituents based on high dividend yields and strong financial metrics. To qualify for inclusion in SCHD, a company must not only offer a high dividend yield but also meet certain financial criteria related to quality. These criteria include factors such as return on equity, cash flow to pay dividends, and low debt levels. This focus on financial quality aims to ensure that the companies in SCHD can sustain their dividend payments over time. However, while SCHD focuses on high yield and quality metrics, its selection criteria do not emphasize the length of time a company has been paying or increasing dividends. As a result, SCHD may include companies that have relatively high yields, but not necessarily a long track record of consistent dividend increases. This can mean that while the dividends are currently high, they might not be as secure or sustainable over the long term compared to those in an ETF like NOBL. NOBL's dividend quality and sustainability *. NOBL, on the other hand, tracks the S&P 500 Dividend Aristocrats Index, which includes companies that have increased their dividends for at least 25 consecutive years. This long-term commitment to increasing dividends reflects a high level of dividend sustainability and reliability. The dividend aristocrats are typically large, established companies with strong financial positions and a proven track record of maintaining and growing their dividends despite various economic conditions. The emphasis on companies with at least 25 years of consecutive dividend increases implies a very high standard for dividend quality and sustainability. These companies have demonstrated their ability to not only pay dividends but also to increase them regularly, signaling robust financial health and a commitment to returning capital to shareholders. This long-term dividend growth history provides a greater level of confidence in the sustainability of the dividends paid by the constituents of NOBL. In summary, the key differences between SCHD and NOBL in terms of dividend quality and sustainability are primarily rooted in their selection criteria. SCHD focuses on high current dividend yields and strong financial metrics, but does not emphasize the length of dividend payment history, which can lead to inclusion of companies with high yields that might not have as long a track record of sustained dividend increases. NOBL, by contrast, prioritizes companies with a long history of consistently increasing dividends, which tends to ensure higher dividend sustainability and reliability. As a result, while SCHD might offer attractive yields, NOBL's dividend aristocrats provide a higher degree of confidence in the long-term stability and growth of their dividends.